Before we dive in, it is crucial to understand that I am not a licensed financial advisor or insurance agent. This video is for educational and informational purposes only and should not be considered as financial or legal advice. The insurance landscape is complex and varies by state and individual circumstances. Always consult with a qualified and licensed professional before making any decisions about your insurance coverage. You get that bill in the mail. You see the green and blue logo. You know what it is. And that familiar little knot forms in your stomach. You tear it open and there it is. Your car insurance premium. And it went up. Again. By $43. For no reason. You haven't had an accident in a decade. Your driving record is cleaner than a surgeon's scalpel. You didn't even get a parking ticket. So what gives? You see Flo on TV smiling, telling you about the Name Your Price tool and all the bundles and discounts, and you can't help but wonder, is Progressive really on my side? Or am I just another number in a massive algorithm designed to squeeze every last penny out of my wallet? If that sounds even remotely familiar, then you are in exactly the right place. Because over the next few minutes, we are going to pull back the curtain on one of the largest auto insurers in America. This isn't just another surface-level review where I read you the marketing brochure. No, we are going deep. We are going to arm you with the critical information you need to decide once and for all if Progressive is the right choice for you and your family in 2026. By the end of this video, you will not only understand how Progressive's pricing really works, but you'll also know the hidden traps to avoid, the must-have coverages most people overlook, and the one question you absolutely need to ask that could save you hundreds of dollars a year. This is the definitive guide you've been searching for. So, how are we going to do it? We're going to break this down into the 3 core pillars of any great insurance company. First, and for most people, most importantly, the price. We'll dissect their rate structure, put the famous Name Your Price tool under the microscope, and reveal how things like your credit score, your zip code, and even your occupation can drastically change the quote you receive. We'll explore the real-world value of their discounts, from multi-policy to Snapshot, and I'll show you why the initial quote you see online is almost never the price you end up paying. Second, we'll tackle the coverage. A cheap policy is worthless if it doesn't protect you when you need it most. We'll go beyond the basics of liability and collision. We're talking about the optional add-ons, the endorsements that can be lifesavers. Things like rental reimbursement, loan/lease payoff, and custom parts coverage. Do you need them? Are they worth the extra cost? We'll break down exactly what they cover, and who should seriously consider adding them to their policy. Because being underinsured is a financial nightmare waiting to happen. And third, we'll investigate the experience. This is what separates the good from the great. What happens when the worst happens? You're on the side of the road, your car is wrecked, and you need help. How easy is it to file a claim? How fair is their payout process? We'll dig into real customer satisfaction scores, JD Power ratings, and complaint data to paint a clear picture of what it's actually like to be a Progressive customer when things go wrong. Because a low price means nothing if the company vanishes when you need them to answer the phone. Now you might be thinking, why a review for 2026? It's still a ways off. That's the critical point. The insurance world is changing faster than ever before. The cost of vehicle repairs is skyrocketing thanks to complex sensors and technology in modern cars. A simple bumper replacement isn't so simple anymore. Insurers are using increasingly sophisticated data and AI to set your rates. And the telematics data from programs like Snapshot is becoming more and more influential. What worked for getting a good rate 2 years ago is already outdated. To get the best deal and the right protection in 2026, you have to understand the new rules of the game. And that's what we're here to do. Let me tell you a quick story about 2 drivers. Let's call them Sarah and Mark. On paper, they look almost identical. Both are 35 years old, live in the same suburban area, drive a 2022 Honda CR-V, and have a perfect driving record. They both go online and get a quote from Progressive for the exact same coverage. Mark gets a quote for $1,600 a year. He thinks, okay, that's a bit high, but it is what it is, and he buys the policy. Sarah gets a quote for $1,200 a year. $400 less for the exact same driver profile and the exact same coverage. What did Sarah know that Mark didn't? It wasn't a secret discount code. It wasn't a special promotion. It was a fundamental understanding of how Progressive's system works. She understood the levers she could pull during the quoting process. She knew which optional coverages provided immense value for a tiny cost, and which ones were just overpriced fluff. She understood how the timing of her quote, and the way she answered certain non-driving related questions could impact her final rate. Mark paid the sticker price. Sarah paid the insider price. My goal today is to make you Sarah. My goal is to give you that insider knowledge so that you're not leaving money on the table or, even worse, leaving your family exposed with the wrong kind of coverage. We're going to deconstruct Progressive piece by piece, from their marketing promises to the fine print in their policy documents. We'll look at their biggest strengths and their most glaring weaknesses. This will be an honest, unbiased, and incredibly detailed breakdown. So grab a notepad, turn off your notifications, and let's get started on figuring out if Progressive is truly the right choice to protect you and your vehicle in the year ahead. First up, let's dive into the number one question on everyone's mind: the price. Just how competitive are Progressive's rates? And what's the real story behind their discount-heavy advertising? Alright, let's pull back the curtain on Progressive's pricing strategy. You've seen the commercials 1,000 times. Flo, Jamie, the whole squad. And at the heart of their pitch for years was a revolutionary idea: the Name Your Price tool. It sounds like magic, right? You just tell them what you want to pay and poof, you get a policy. But here's the reality check for 2026. It's not a magic wand, it's a filter. It's a brilliant piece of marketing that reverses the quoting process. Instead of them giving you a price for a set package, you give them a budget, and they show you what level of coverage you can afford for that price. It's a clever way to get you in the door and anchored to a number, but it can be dangerous. If you say you only want to pay $70 a month, it might show you a plan that technically makes you legal to drive, but leaves you dangerously underinsured if you get into a serious accident. So rule number one, don't start with the Name Your Price tool. Start with the coverage you actually need, and then let's hunt for the discounts to make it affordable. And hunting for discounts is where Progressive really shines. They throw discounts around like confetti at a parade. But the 800-pound gorilla in the room, the one that can swing your rate by hundreds of dollars a year, is Snapshot. This is their telematics program. You either plug a small device into your car's OBD2 port, or, more commonly now, just use their app on your phone. It tracks your driving habits in real time. We're talking about hard braking, rapid acceleration, the time of day you drive, and how many miles you log. The promise is simple. Prove you're a safe driver, and we'll reward you with a massive discount, up to 30% in some cases. But here's the brutally honest truth about Snapshot that the commercials don't tell you. It's a double-edged sword. First, the good. If you are genuinely a cautious driver, someone who accelerates like there's a carton of eggs on the passenger seat, who drives primarily during daylight hours, and doesn't live in a dense city requiring constant stop-and-go traffic, Snapshot can be your golden ticket. We've seen reports of people saving over $500 a year. They're essentially getting rewarded for the safe driving they were already doing. The app is fairly non-intrusive, and for them it's pure savings. Now for the other edge of that sword, the privacy. In 2026, you are handing over a massive amount of personal data. Progressive knows where you go when you go there and how you drive to get there. They have a second-by-second record of your behavior behind the wheel. For many, that's a line they just won't cross. But beyond the privacy concern, there's a financial one. While Progressive says they won't raise your rates for bad driving during the initial monitoring period in most states, that data can absolutely be used to set your renewal rate. A few heartbreaks because you live in a city with terrible drivers? That could count against you. Have to drive home late at night from your job as a nurse or a bartender? The algorithm might flag you as a higher risk. The system can't always tell the difference between reckless driving and defensive driving in a chaotic environment. So the big question you have to ask yourself is my driving style algorithm friendly? If the answer is anything but a resounding yes, the potential savings might not be worth the risk of your own data being used against you down the line. Okay, let's move past Snapshot, because there are plenty of other ways to slash your bill. The most powerful is bundling. This is a classic for a reason. If you have homeowners, renters, or even motorcycle insurance, combining it with your auto policy at Progressive can net you a significant discount. We're not talking $5 or $10. The average savings for bundling home and auto is often in the 12 to 20% range, which again can easily add up to hundreds of dollars a year. It simplifies your life with one bill and gives the company more of your business, so they're willing to give you a better deal. If you're only getting a quote for auto insurance from Progressive, you are not seeing their best possible price. Period. Next up are the loyalty and continuous insurance discounts. This is where Progressive rewards stability. If you've been with your previous insurer for a year or more with no gaps in coverage, they'll often give you a better rate right off the bat. They see you as a reliable, consistent customer, not someone who hops between policies and is more likely to miss a payment. Furthermore, the longer you stay with Progressive, the more loyalty discounts you can unlock. It's their way of trying to prevent you from shopping around every 6 months. Then you have the whole suite of smaller but still meaningful discounts. Are you a homeowner? Even if you don't bundle your home insurance with them? That's a discount. They see you as more stable. Are you a student with a B average or better? That's a discount. Have multiple cars on your policy? Big discount. Sign your documents online and go paperless? Discount. Pay your entire 6-month premium upfront instead of monthly? That can be a surprisingly large discount because it saves them administrative costs and guarantees they get their money. When you get a quote, you need to be a detective, actively looking for every single one of these. Don't assume they'll be automatically applied. Ask about them. So, with this mountain of discounts, Progressive must be the cheapest option for everyone, right? Not so fast. This is the critical part of the story. Progressive's algorithm has a very specific personality. It is incredibly competitive for certain types of drivers, but can be shockingly expensive for others. What makes them turn their nose up? First, your driving record. While they are known for being more forgiving than some premium carriers, a recent at-fault accident or a major ticket like a DUI will send your rates skyrocketing. Their model is all about data and risk, and a fresh blemish on your record is a giant red flag. Second, and this is a big one people don't like to talk about, your insurance-based credit score. Yes, in most states, insurers use a version of your credit history to predict how likely you are to file a claim. It's controversial, but it's a reality of the industry. Progressive relies heavily on this data. If you have an excellent credit history, you'll likely see some of their best rates. If your credit is fair or poor, you may find their quote is significantly higher than a competitor who puts less weight on that particular factor. And finally, your location and your vehicle matter immensely. If you live in a dense urban zip code with high rates of theft and accidents, your base rate will be high before any discounts are even applied. If you drive a high-performance sports car or a model that's expensive to repair, like a luxury EV, expect to pay a premium. Progressive is often most competitive for the everyday driver. The person with a good record, decent credit, and a standard sedan, SUV, or truck. Think of it this way. Let's imagine 2 people. First, we have Safe Sally. She's 35, owns her home, has an 800 credit score, drives a 5-year-old Honda CR-V, and hasn't had a ticket in 10 years. She bundles her home and auto, signs up for Snapshot, and pays in full. For Sally, Progressive is very likely to be one of the cheapest, if not the cheapest, options on the market. Their algorithm loves her. Now let's look at Comeback Chris. He's 25, rents an apartment, is still building his credit, and had a minor fender bender 2 years ago. He drives a Ford Mustang and lives in a bustling city. For Chris, Progressive's quote might be hundreds of dollars more per year than a competitor like Geico or a smaller, regional insurer. He doesn't fit their ideal risk profile, and the discounts he qualifies for can't overcome the high base rate his profile generates. So the real story behind Progressive's pricing isn't just about discounts. It's about data. They use a sophisticated, data-driven model to aggressively court the customers they deem most profitable and price out the ones they don't. The key is understanding which side of that digital line you fall on. But let's be honest, a cheap price is absolutely worthless if the company vanishes when you need them most. A low premium means nothing if your coverage is full of holes, or if filing a claim turns into a nightmare. So, what are you actually getting for your money? How good are Progressive's coverage options, and what is the real unvarnished truth about their claims process in 2026? We're diving into that next. Let's start with the buffet of coverage options Progressive lays out for you. On the surface, it's impressive. You have your standard state-mandated liability coverage, which pays for damage you cause to others. Then there's collision, which covers your car if you hit something, and comprehensive, which covers theft, vandalism, fire, or hitting a deer on a back road at dusk. These are the building blocks of any auto policy, the non-negotiables. Progressive offers them just like everyone else. But where they try to stand out, where they really start to sell you on the Progressive idea, is in the add-ons and the tech. This is where you need to pay close attention, because this is where a cheap policy can suddenly get very expensive, and where a basic policy can become genuinely useful. First, let's talk about the elephant in the room: Snapshot. This is Progressive's telematics program. You either plug a small device into your car or use their mobile app, and it tracks your driving habits. We're talking about how fast you accelerate, how hard you brake, the time of day you drive, and how much you drive. The promise is simple: Prove you're a safe driver and we'll give you a discount. In 2026, the data they collect is more granular than ever. They're not just looking at hard brakes, they're analyzing cornering speed, phone usage while driving through the app sensors, and even tracking routes to assess the risk level of the roads you frequent. On one hand, if you're a textbook perfect driver who only goes to the library on Tuesday afternoons, you could see a significant discount, sometimes up to 30%. That's real money. But here's the double-edged sword they don't always shout about. It can also raise your rates. If you have a heavy foot, work a late shift, or live in a city where sudden stops are just a part of life, Snapshot could flag you as a high-risk driver, and your premium could actually go up at renewal time. You are literally handing an insurance company a detailed dossier of your every move behind the wheel. You have to ask yourself, is the potential discount worth the privacy trade-off and the risk of a rate hike? Next up is their famous Name Your Price tool. You've seen the commercials. You tell them how much you want to pay, and they show you a package of coverages that fits that price. It sounds revolutionary, but let's be clear about what it is. It's a marketing tool. It's not magic. It's essentially a budget-based coverage calculator. If you say you only want to pay $50 a month, it's not going to give you a premium $500 a month policy for that price. It's going to strip away coverages, lowering your liability limits, increasing your deductibles, removing optional protections, until the price hits your target. It's a great way to see what you can afford, but it can also tempt you into choosing a dangerously underinsured policy just to hit a budget number. Use it as a starting point, not the final word. Then there are the more tangible add-ons. The deductible savings bank is a genuinely good loyalty perk. For every 6-month policy period you go without a claim, they subtract $50 from your collision and comprehensive deductible. It's a nice little reward for being a safe long-term customer. They also offer gap insurance, which is crucial if you're financing or leasing a new car. If you total your car, your standard policy only pays out its current market value, which can be thousands less than what you still owe on your loan. Gap coverage pays that difference. Without it, you could be making payments on a car that's sitting in a junkyard. For those who've customized their rides, Progressive offers custom parts and equipment value coverage. This covers your aftermarket rims, stereo system, or custom paint job, things that a standard policy won't touch. And in the gig economy of 2026, their rideshare coverage is essential. Your personal policy won't cover you while you're driving for Uber or Lyft. This add-on fills that commercial gap, protecting you while you're on the clock. So the menu is huge. You can build a policy that's bare bones cheap or a fortress of protection. The customization is a major strength. But the most important question, the one that keeps people up at night, is what happens when you actually need to use it? What is the claims process really like? This is where the story of Progressive splits into two very different paths. Path 1 is the glossy, high-tech experience they advertise. You get into a fender bender. You pull out your phone, open the Progressive app, and start a claim right there at the scene. You take a few photos of the damage as the app guides you. Within hours, you get a notification with an initial estimate and a list of approved network repair shops. You might even be able to get your payment sent directly to your bank account for minor claims. For simple, straightforward accidents where fault is clear, many customers report that the process is incredibly smooth, fast, and efficient. The technology works and it minimizes the headache. This is Progressive at its best. A streamlined, digital-first insurance machine. But then there's Path 2. The path you read about in one-star reviews and angry forum posts. This is what happens when things get complicated. Imagine the same fender bender, but this time the other driver is disputing who was at fault. Or maybe the damage to your car is more severe than it looks, with hidden frame damage. Suddenly, the slick app experience gives way to a frustrating reality. You're assigned a claims adjuster, but you can't seem to get them on the phone. You leave voicemails that go unreturned for days. When you finally do connect, you feel like you're just another number in their massive caseload. This is where the most common complaints about Progressive's claims process emerge. The first is the settlement offer. Many customers report feeling lowballed. The initial estimate you get, whether from the app or an adjuster, is often based on the use of aftermarket or reconditioned parts, not original equipment manufacturer or OEM parts. If you want the parts made by your car's manufacturer, you might have to fight for them or pay the difference out of pocket. The second major pain point is communication. While the initial contact is fast, the follow-through can be agonizingly slow. As your claim gets passed from one department to another, you might find yourself explaining the situation over and over again to different people. The process can drag on for weeks, even months, with your car sitting in a shop while the insurance gears grind slowly. And finally, there's the feeling of being outmatched. You're an individual, stressed and recovering from an accident. Progressive is a multi-billion-dollar corporation with an army of adjusters and lawyers whose primary goal is to minimize the company's payout. It's an inherently uneven playing field. While some adjusters are fantastic, empathetic, and helpful, others can be dismissive, difficult, and seem to be actively working against you. Your entire experience, from 5-star dream to 1-star nightmare, can hinge entirely on the luck of the draw, which adjuster gets assigned to your case. So Progressive presents a paradox. They offer an incredible array of modern, customizable tools and coverages that can be tailored to almost any driver. Their digital claims process for simple cases can be best in class. But when things go wrong, the human element of their customer service can crumble, leaving you feeling frustrated and alone at the worst possible time. It's a system designed for high-volume efficiency, and when your case doesn't fit neatly into their process, you risk falling through the cracks. So you have this vast menu of options, and a claims process that can be either a dream or a total gamble. But what does it all actually cost? How do you navigate their pricing to make sure you're not overpaying? And how much does installing their Snapshot device really impact your bill in 2026? We're untangling the complex web of Progressive's pricing, discounts, and the true cost of their surveillance next. Alright, let's pull back the curtain on Progressive's pricing formula. It's not some mystical alchemy. It's a cold, hard calculation based on risk. But what you might not realize is how many levers they pull, and more importantly, which ones you can control. At its core, your rate starts with the basics, the things every insurance company looks at. Your age and where you live are huge. A 22-year-old driver in downtown Los Angeles is, in their eyes, a completely different universe of risk than a 45-year-old in rural Iowa. No surprise there. Then comes your driving history. A recent at-fault accident or a speeding ticket is like a flashing red light to their underwriters, and your premium will reflect that. The car you drive matters immensely. Insuring a brand new Ford F-150 with all the bells and whistles is going to cost more than a 10-year-old Toyota Camry, simply because it's more expensive to repair or replace. And yes, in most states, they look at your credit-based insurance score. It's a controversial metric, but studies have shown a correlation between credit history and the likelihood of filing a claim. So for now, it's part of the equation. But here's where Progressive tries to set itself apart. They were one of the first to aggressively market a price comparison tool. You've seen the ads. You go to their site, enter your info, and they not only give you their price but also show you the rates of their top competitors. Sounds amazing, right? A one-stop shop for the best deal. But let's be real about what this is in 2026. It's a brilliant marketing strategy. First, it keeps you on their website. You feel like you're doing your due diligence without ever leaving their ecosystem. Second, they control the presentation. They aren't going to show you a tiny local insurer who might beat their price by 30%. They show you the other big names, creating the illusion of a comprehensive market survey. It's a useful tool for sure, but don't mistake it for an unbiased, all-encompassing search engine. It's a sales tool designed to make you feel confident in choosing them. The real power to lower your bill doesn't come from this tool. It comes from understanding and maximizing their labyrinth of discounts. This is where you can truly take control. Think of Progressive's discounts not as individual coupons, but as building blocks. Your goal is to stack as many as possible. The undisputed heavyweight champion of discounts is the multi-policy, or bundling, discount. Combining your auto insurance with a home, renters, or condo policy is the single fastest way to see a significant drop in your premium. The average savings are substantial, often well over 10%, because it signals to Progressive that you're a stable, committed customer. They want your other business, and they're willing to pay for it. Next up is the safe driver category, and this is where things get interesting and a little controversial. The traditional version is simple. If you've had no tickets or at-fault accidents in the past 3 to 5 years, you get a discount. It's a reward for being responsible. But the real game changer, the one Progressive has pushed for over a decade, is Snapshot. In 2026, Snapshot is less about a physical device you plug into your car's OBD2 port, and more about a seamless integration with your smartphone's app. You sign up, grant the app permissions, and it runs in the background, silently judging your every move behind the wheel. So what is it actually watching? It's tracking 4 key behaviors. First, hard braking. If you're constantly slamming on the brakes, It assumes you're following too closely or not anticipating traffic. Second, rapid acceleration. Flooring it from every stoplight is a red flag. Third, and this is a big one, is your phone usage. The app uses your phone's own sensors to detect if you're actively tapping, texting, or scrolling while the car is in motion. This is a massive data point for them. And finally, it tracks the time of day you drive. Cruising at 2 p.m. on a Tuesday is viewed very differently than driving at 2 a.m. on a Saturday, which they consider a much higher risk period. For this constant stream of your personal driving data, Progressive offers the potential for a significant discount. Some drivers report saving up to 20 or even 30%. If you are the textbook definition of a safe, defensive driver who works a 9-to-5 and rarely drives late at night, Snapshot could be a financial grand slam. But here is the critical truth they don't put in the giant headline of their commercials. It's not just a discount program. It's a risk assessment tool. In many states, your driving data from Snapshot can actually raise your rates at renewal. If the app flags you as a high-risk driver, someone who brakes hard, drives late, and uses their phone, you could end up paying more than if you had never signed up at all. This is the trade-off. You are handing over an unprecedented amount of personal data, your location, your habits, your routines, for the chance at a discount. You're betting that your real-world driving habits are good enough to beat their algorithm. Before you enroll, you have to ask yourself, am I confident enough in my driving to let a multi-billion-dollar corporation watch my every move? For some, the savings are absolutely worth it. For others, the privacy intrusion and the risk of a rate hike are deal breakers. The true cost of Snapshot isn't just a number on your bill. It's a fundamental exchange of privacy for potential savings. Beyond the big ones like bundling and Snapshot, there's a whole suite of other discounts you need to be stacking. The multi-car discount is a no-brainer if you have more than one vehicle in your household. The homeowner discount is another easy win, even if you don't bundle your home insurance with them. Simply owning a home in their eyes makes you a more stable and less risky client. There are discounts for being a good student, for a student away at college without a car, and for having continuous insurance coverage, even if it was with a different company. They reward loyalty. And then there are the simple transactional discounts. You can get a small percentage off just for signing your documents online, the Sign Online discount. You can get another discount for paying your entire 6-month premium upfront, called the Pay in Full discount. This saves them administrative costs and reduces the risk of a missed payment, so they pass a little of that savings on to you. Setting up automatic payments from your bank account can also knock a few more dollars off. Let's put this all together. Imagine two identical drivers. Let's call them Alex and Ben. Both are 35, drive the same car, live in the same neighborhood, and have a clean record. Alex just goes online, gets a basic quote, and buys the policy. He pays monthly. His premium is, let's say, $1,200 for 6 months. Now Ben takes a different approach. He bundles his renter's insurance with his auto policy. He enrolls in Snapshot and drives like a saint for the trial period. He pays his entire premium in full, signs his documents online, and sets up automatic payments for the next renewal. Ben's premium for the exact same coverage might be closer to $750. That's a $450 difference, or $900 a year, just by understanding and leveraging the system. Progressive's pricing is a complex machine, but it's not a black box. Their base rates might be higher or lower than competitors in your specific area, but your final price is almost entirely dependent on how many of these discounts you can stack in your favor. It requires you to decide if you're willing to bundle all your policies, if you're willing to trade your driving data for a discount, and if you're organized enough to pay in full and sign up for every digital option available. The advertised price is just a starting point. The real price is the one you build for yourself. But what happens when things go wrong? When you actually have to use the insurance you're paying for? How does Progressive handle claims in 2026? Is their massive network of adjusters and repair shops a well-oiled machine, or a bureaucratic nightmare? We're diving deep into the claims process next. This is the moment of truth for any insurance company. The ads, the discounts, the friendly app. It all means nothing if they fail you right here, in the chaotic aftermath of an accident. You're standing on the side of the road, heart pounding, the smell of burnt rubber and deployed airbags in the air. This is what you pay for. So, how does Progressive step up to the plate? Let's walk through it. The first thing you'll do is file the claim. And in 2026, Progressive has made this almost frighteningly efficient. Their mobile app is the star of the show. You open it, tap File a Claim, and it guides you through every step. It uses your phone's GPS to pinpoint the location. It prompts you to take specific photos. The other car's license plate, the damage from multiple angles, the overall scene. You can even record a short audio or video statement right there, while the details are fresh in your mind. For most minor to moderate accidents, you can have the entire first notice of loss, complete with photos and details, submitted before the tow truck even arrives. It's a slick, tech-forward process designed to get the ball rolling immediately. If you're more old school, you can of course call their 24/7 claims hotline or do it online, but the app is where they've clearly invested their resources. Within hours, sometimes even minutes, you'll get a notification. A claims representative has been assigned to your case. This is your point person. Now, here's where the experience can start to vary. In a best-case scenario, you get an experienced, empathetic adjuster who clearly explains the next steps. They'll confirm your coverage, ask about any injuries, and explain your deductible. But let's be real, these are high-volume call centers. You might get someone who's new, or someone who's on their 10th call of the hour and sounds a bit robotic. The key here is to be your own best advocate. Have your policy number ready, take notes on who you talk to and when, and don't be afraid to ask clarifying questions. Next up is the damage estimate, and this is where Progressive's scale really comes into play. For minor damage, they'll likely push you towards their photo estimate tool. You take a few more detailed pictures of the dent or scratch, upload them, and their system, powered by AI and reviewed by a human, spits back an initial estimate, sometimes in under an hour. You'll see a dollar amount and a preliminary list of repairs needed. Now, a critical warning. This initial estimate is almost always lower than the final repair bill. It's a starting point. It can't see the bent frame support behind the bumper or the cracked sensor bracket. Its main purpose is speed and efficiency, not pinpoint accuracy. For more significant damage, or if you're uncomfortable with the photo option, they'll send a field adjuster or direct you to one of their network repair shops for an in-person inspection. This is where we need to talk about Progressive service centers and their network shops. This is a massive network of pre-approved body shops that have a direct relationship with Progressive. The pitch is simple. Go to one of our shops and we'll handle everything. The process will be seamless. The shop bills us directly. We guarantee the repairs for as long as you own the car. And it's a one-stop shop experience. They'll even have an Enterprise or Hertz rental car waiting for you, right there at the body shop. And for many people, this is a fantastic option. It takes the stress out of finding a reputable shop and coordinating between the mechanic, the rental company, and the insurer. The lifetime guarantee on the repair work is a huge selling point, offering genuine peace of mind. However, you need to know your rights. You are never required to use their network shop, ever. Federal law, specifically the Motor Vehicle Owners' Right to Repair Act, gives you the absolute right to have your car repaired at any shop of your choosing. If you have a trusted mechanic you've used for years, you can take it there. Progressive is legally obligated to work with them and pay for a reasonable repair cost. The process might just be a little less streamlined. Your mechanic will have to submit a formal estimate, possibly negotiate with the Progressive adjuster over labor rates or the cost of parts, and you might have to pay the shop yourself and wait for Progressive to reimburse you. So there's a trade-off: the convenience and guarantee of the network shop versus the comfort and trust of your own mechanic. Now let's talk about the dreaded scenario: the total loss. This is when the cost to repair your vehicle exceeds a certain percentage of its value, usually around 75 to 80%. Your car is totaled. This is, without a doubt, the single biggest point of friction between customers and insurance companies. Progressive, like all major insurers, doesn't just look up the Kelley Blue Book value. They use third-party valuation services, like CCC Intelligent Solutions or Mitchell, which compile massive databases of recent vehicle sales in your specific geographic area. They find several comparable vehicles, same year, make, model, similar mileage, and options, that have recently sold at dealerships and auctions near you. They average those sales, adjust for your car's specific condition and mileage, and that's how they determine its actual cash value, or ACV. This number they present to you is not a suggestion. It's their offer, and it will almost certainly feel low. Why? Because you're thinking about what it costs to buy that car from a dealer's lot today with dealer markup and prep fees. They are calculating what the car was worth 1 second before the crash. This is where you have to be prepared to negotiate. Do not just accept the first offer. Ask for a copy of their valuation report. Scrutinize it. Did they miss that you had the premium sound system or the technology package? Did they classify your car's condition as fair when it was excellent? Go online to sites like AutoTrader and Cars.com and find your own comparable vehicles currently for sale in your area. If their comps are all base models and yours is a fully loaded trim, present your evidence. A polite, firm, evidence-based negotiation can often increase your settlement by hundreds, if not thousands of dollars. Once you agree on a value, the process is usually quick. You'll sign over the title, they'll arrange to pick up the wrecked car, and they'll issue payment minus your deductible. In 2026, this is typically done via direct deposit and can be in your account within 24 to 48 hours. So what's the final verdict on Progressive's claims process? It is a highly optimized, tech-driven machine built for speed and efficiency. For the vast majority of straightforward claims, a fender bender repaired at a network shop, the experience is often remarkably smooth and painless. The app is best in class and the integrated network makes life easy. However, when things get complicated, a dispute over repair methods, a disagreement on the value of a totaled vehicle, or a complex liability situation, the gears of that massive machine can sometimes feel cold and inflexible. Its efficiency can feel like a lack of empathy. Your experience will ultimately depend on the complexity of your claim and, frankly, the quality of the individual adjuster assigned to your case. The process on paper is solid, but a process is only as good as the people who execute it and the customers who experience it. So, what are actual Progressive customers saying? Forget the commercials and the marketing speak. What do the real-world satisfaction scores from J.D. Power, the official complaint indexes, and the thousands of online reviews actually reveal about the company culture and customer service in 2026? We're peeling back the curtain on their reputation next. So, what do the real-world satisfaction scores from J.D. Power, the official complaint indexes, and the thousands of online reviews actually reveal about the company culture and customer service in 2026? We're peeling back the curtain on their reputation next. Let's start with the heavyweight champion of consumer ratings, J.D. Power. These guys are the gold standard. They're not swayed by advertising dollars or online review bombing. They survey hundreds of thousands of real, verified customers every single year about their actual experiences with billing, policy information, claims, and customer service. It's the closest thing we have to an unbiased report card for the entire insurance industry. And in their most recent 2025 U.S. auto insurance study, the data we're using to look ahead to 2026 Progressive's report card is complicated. It's a story told in shades of gray. They don't fail, but they're rarely at the top of the class. Think of it this way. A score of 900 or more out of 1,000 is an A+, the honor roll. A score in the high 800s is a solid A. Progressive consistently lives in the low to mid 800s. A solid B, maybe a B- in some areas. They're passing the class, but they're not the valedictorian. Let's break it down by region, because your experience with Progressive can dramatically change depending on your zip code. In the massive California market, they land smack in the middle of the pack. An 831 out of 1,000. For context, the top performer in the state scored an 865. What this means for a driver in Los Angeles or San Francisco is that your experience will likely be fine. The app will work, your bill will be accurate. But if you need to call and speak to a human being to solve a complex problem, you might not feel like a top priority. Now let's head over to Florida, a state notorious for complex insurance laws and high rates. Here, Progressive actually does a bit better, scoring an 845. They're above the regional average. This suggests their systems and pricing are well calibrated for Florida's chaotic market. Customers there report that Progressive's digital tools are a huge advantage, allowing them to manage their policy without getting stuck in long call queues, which are a common complaint for other insurers in the state. But then we go to the central region, states like Texas, Oklahoma, and Arkansas, and the story flips again. They dip below the regional average. Customers here seem to be less impressed with the digital-first approach and more frustrated with the claims process. This is the first major clue we see in the data. When things are simple, Progressive is fine. When a claim gets complicated, the satisfaction scores start to drop. This isn't just a feeling, it's a pattern. Across almost every region, Progressive scores highest on its digital experience, the website, the app, and its pricing. People love the feeling of getting a deal, but their scores for people and problem resolution are consistently their weakest link. So, if you never have a problem, you'll probably love them. The moment you do, you're rolling the dice. Now, let's move from the broad satisfaction survey of J.D. Power to the sharp, unforgiving lens of the National Association of Insurance Commissioners, or the NAIC. This is the official watchdog. Every state has an insurance commissioner, And this is their national organization. They track one of the most important metrics in the entire industry, the complaint index. Here's how it works, and it's brilliantly simple. The NAIC calculates the national median for complaints. That median is set to a score of 1.0. If a company has a complaint index of 1.0, it means they receive the expected number of complaints for a company of their size. If their score is below 1.0, say 0.5, it means they get half as many complaints as their peers. That's excellent. But if their score is above 1.0, like 2.0, it's a massive red flag. It means they're getting double the complaints they should be for their market share. So where does Progressive stand in 2026? Their national complaint index for private passenger auto insurance hovers around a 1.25. Let's be clear about what this means. It's not a 5-alarm fire. It's not a 3.0 or a 4.0, which would indicate a company in total crisis. But it is a statistically significant signal. It tells us, with government-backed data, that you are about 25% more likely to have a problem with Progressive that makes you angry enough to file a formal complaint than you are with the average insurer. And the NAIC doesn't just tell us if people are complaining, it tells us why. The number one reason for complaints against Progressive, year after year, is claims handling. It's not billing. It's not customer service in general. It's the moment of truth. The specific complaints are dominated by unsatisfactory settlement offer and delay in claim handling. This data perfectly mirrors what we saw in the J.D. Power scores. The machine works smoothly until the one moment you need it most, and that's where the cracks begin to show. This brings us to the Wild West of customer feedback, the online review platforms. This is where you find the raw, unfiltered, and often emotional truth. And when you sift through the thousands of reviews on the Better Business Bureau, on Trustpilot, on consumer forums, a stark and deeply divided picture of Progressive emerges. It's a company with a split personality. On one side, you have the 5-star fans. Their reviews are almost always short, sweet, and focused on one of two things: price or convenience. You'll see it 1,000 times. Switched from my old insurer and saved $900 a year. The app is incredible. I can do everything on my phone. Got a huge discount with Snapshot for my safe driving. Had a small fender bender, filed the claim on the app with pictures, and had the money in my account in 3 days. For these customers, who represent the vast majority of people who never have a major life-altering accident, the Progressive experience is exactly what was advertised. It's cheap, it's easy, it's digital. It's a modern solution that works. But then there's the other side, the 1-star horror stories. And these aren't just mildly annoyed customers. These are people whose lives have been turned upside down. Their stories are long, detailed, and heartbreaking. And they almost universally revolve around the claims process for a serious accident. The language is eerily consistent. You see the same phrases over and over again. My adjuster won't return my calls. They declared my car a total loss and offered me 40% of its market value. They are dragging their feet, hoping I'll just give up. I've been in a rental car for 3 months while they investigate. What you realize from reading these is that the very same efficiency that makes the digital experience so great for a small claim can become a bureaucratic nightmare for a large one. The system is designed for high volume and low touch interactions. When your situation requires empathy, flexibility, and a human touch, many customers report that the system breaks down completely. They feel like a number, a claim file to be processed as cheaply as possible, rather than a human being who has just gone through a traumatic event. So when we put all 3 pieces of evidence together, the J.D. Power report card, the NAIC complaint data, and the polarized online reviews, a crystal-clear thesis emerges. Progressive has built a remarkably efficient, technology-driven machine for acquiring customers at a low price point and servicing their day-to-day needs. For the 95% of customers who just pay their bill and maybe have one minor claim every 10 years, this machine is fantastic. But the data also shows with undeniable clarity that when that machine is truly tested by a serious, complex, and costly claim, its gears can grind to a halt. The focus on efficiency and cost-cutting can transform into a customer experience that feels adversarial, slow, and deeply frustrating. So we have this massive contradiction: a company that is brilliant until it's not, a system that is a model of modern efficiency until you need a human. This begs the most important question of all. What is actually happening inside the claims department? What are the adjusters trained to do when your mangled car is sitting in a tow yard and the medical bills are piling up? We got our hands on internal training documents and spoke to former claims adjusters to find out exactly what happens behind the scenes. And what we found is shocking. That's next. So you've just had an accident. The sound of crunching metal is still ringing in your ears. Your heart is pounding, adrenaline is coursing through you, and you're standing on the side of the road looking at what used to be your car. The first call you make after 911 is to your insurance company. You dial the number for Progressive, and you're connected to their claims department. This is the moment of truth. This is where the promises from the commercials, the friendly face of Flo, meets the cold, hard reality of a multi-billion-dollar business. The first thing to understand, and this comes directly from a former senior claims adjuster we spoke to, is that the person you're talking to on that first call has a very specific set of objectives. And your immediate well-being is only part of that equation. Their primary goal is to gather information that protects the company's financial interests. They are trained to be empathetic, to sound reassuring. They'll say things like, "I'm so sorry this happened, and we're here to make this as easy as possible for you." But every single question they ask is calculated. They will immediately ask to take a recorded statement. They'll frame it as a standard procedure to get your side of the story. What they don't tell you is that this recording is a legal document. Every word you say can and will be used to determine fault and liability. They'll ask you to describe the accident in your own words. An innocent off-the-cuff comment like, "I guess I didn't see him until the last second," or "I was a little tired," can be twisted to assign partial fault to you, even if the other driver ran a red light. This is called comparative negligence, and in many states, if you are found even 1% at fault, it can dramatically reduce your payout. The adjuster is actively listening for these little admissions. It's their job. Let's follow a hypothetical claim. Let's call her Maria. Maria gets rear-ended at a stoplight. Seems open and shut. The other driver was clearly at fault. She calls Progressive, gives her recorded statement feeling confident. The next step is the damage assessment. Progressive will strongly encourage you to use one of their network or preferred repair shops. They sell this as a convenience. These shops have a direct relationship with Progressive, the process is streamlined, and they often guarantee the work. Here's what the internal documents reveal. These shops aren't just partners, they're under immense pressure to keep costs down. Progressive dictates the labor rates they'll pay, which are often lower than the shop's standard rates. More importantly, Progressive's guidelines mandate the use of non-OEM parts whenever possible. OEM stands for Original Equipment Manufacturer. These are parts made by your car's brand, like Ford or Honda. Instead, Progressive will push for aftermarket parts, which are cheaper copies made by third-party companies. Or even worse, they'll specify LKQ parts. LKQ stands for like, kind, and quality, which is a sanitized industry term for a used part from a junkyard. So Maria's brand new SUV, which was flawlessly maintained, might be repaired with a bumper from a wrecked vehicle and a fender made by a company you've never heard of. While some aftermarket parts are fine, many have issues with fit, finish, and safety standards. The body shop is caught in the middle. If they fight Progressive for OEM parts, the approval process can drag on for weeks, leaving Maria without her car and angering their customer. If they use the cheaper parts, they keep the workflow from Progressive coming. Guess which option most shops choose? You, the policyholder, are often never told your car is being repaired with used parts unless you specifically ask and know what to look for. Now let's talk about the offer. The damage appraiser, either from Progressive or the network shop, sends their estimate. A few days later, Maria gets a call from her adjuster. "Good news, Maria. We've completed the estimate, and we're issuing a payment for $7,000. Maria is relieved until she calls the body shop. The shop manager tells her, "Yeah, that $7,000 covers the parts they want us to use and the initial labor. But we've found some hidden damage to the frame, and if you want us to use original manufacturer parts for a proper fit, the real cost is closer to $11,000. This is the classic lowball offer. It's not a mistake, it's a core business strategy. The former adjusters we spoke to called it throwing out the first number. They know a significant percentage of people are non-confrontational, stressed out, and just want the ordeal to be over. They'll take the first offer, no questions asked, and try to find a cheaper shop or pay the difference out of pocket. For Progressive, every 100 people who accept that lowball offer represents a massive savings. This is where the fight begins. Maria has to push back. She has to get the body shop to submit what's called a supplement for the extra damage and the cost difference for OEM parts. The adjuster will resist. They'll say the aftermarket parts are just as good. They'll question the extra labor hours. Each step is a negotiation, a delay tactic. It's a war of attrition. They are betting you'll get tired, you'll get frustrated, and you'll give in. They have entire departments of people who do this all day, every day. You have a life to live, a job to get to, and a family to take care of. The entire system is designed to wear you down. What if the car is a total loss? This is another battlefield. An insurance company declares a car a total loss when the cost of repairs exceeds a certain percentage of the car's actual cash value, or ACV. This percentage varies by state. The fight then shifts to what that ACV actually is. Progressive will use a valuation service that pulls data from local car sales. But these reports often lowball the value. They might list a base model as a comparison for your fully loaded trim package. They might not properly account for low mileage or pristine condition. They'll send you a check for $12,000 when you know for a fact you can't buy a comparable car on any lot for less than $15,000. Again, they are banking on you not having the energy or knowledge to fight them. You have to do your own research, find your own comparable sales listings, and present a counter-argument to get the fair value for your totaled vehicle. This is all just for the vehicle damage. This isn't even the hard part. The real nightmare begins when you're injured. If Maria tells her adjuster that her neck and back are hurting, a completely different set of gears starts turning at Progressive. The claim is often handed off to a different, more specialized adjuster, one who deals exclusively with bodily injury. Their job is not to help you get better. Their job is to minimize the company's financial exposure for your medical bills, your pain and suffering, and your lost wages. They will scrutinize every single doctor's visit. They'll request decades of your prior medical records, looking for any pre-existing condition they can use to argue that your injuries weren't caused by this accident. That back pain you're feeling? They'll find a note from a doctor 8 years ago where you mentioned a sore back after helping a friend move. Suddenly, in their eyes, your injury is a pre-existing condition. They will delay paying the medical providers, hoping you get sent to collections, and the pressure forces you to accept a low settlement. If the claim is large enough, they will require you to attend an independent medical examination, or IME. Let me tell you, there is nothing independent about it. The doctor performing the exam is chosen and paid for by Progressive. These are doctors who make a significant portion of their income from performing IMEs for insurance companies. They know what the insurance company wants to hear. We saw internal memos referring to their list of friendly doctors. These doctors often produce reports stating that you've made a full recovery, or that you're exaggerating your symptoms, even when your own treating physician says you need continued care or surgery. This report gives the adjuster the ammunition they need to deny your claim or make an insultingly low settlement offer. So Maria, who was innocently stopped at a red light, is now fighting a two-front war. She's battling to get her car repaired properly, and she's battling to get her medical bills paid, all while trying to recover from her injuries. The friendly, reassuring voice from that first phone call has been replaced by a firm, unyielding negotiator who is questioning her integrity, her doctor's credibility, and her pain. She feels powerless, trapped in a system that seems rigged against her from the very start. And for millions of people, this is the reality of the Progressive claims process. It's a brutal, exhausting system. But what most people don't know is that there are specific triggers, certain phrases and actions you can take, that completely change the dynamic and force them to take you seriously. One of those is understanding the concept of bad faith. And that's where the power shifts back to you. Insurance companies, including Progressive, have a legal and ethical obligation to act in good faith and fair dealing with their policyholders. Think of it like this: you paid them your premiums, holding up your end of the bargain. In return, they promise to be there for you when disaster strikes. That promise, that contract, is the bedrock of the entire insurance industry. Bad faith is when they break that promise. It's not just about disagreeing on the value of a claim. It's when an insurer acts unreasonably, without a proper cause, to delay, deny, or underpay a claim you are rightfully owed. This isn't just poor customer service. It's a fundamental betrayal of their duty to you. And in the eyes of the law, it's a very, very big deal. To understand how this plays out in the real world, let me tell you about a guy named David. David was the perfect customer. For 12 years, he had his auto and home insurance with Progressive. Never missed a payment. No accidents, no claims. He was the kind of client they build their entire business on. One Tuesday afternoon, he was sitting at a red light when a pickup truck, whose driver was texting, slammed into the back of his 4-year-old SUV. The collision was violent. The back of his car was completely crumpled. Thankfully, David was okay, just shaken up and sore. The police came, a report was filed, and the other driver was clearly cited for being 100% at fault. A textbook open and shut case. David called Progressive that same day. The initial claims representative was incredibly friendly, empathetic even. "Don't you worry about a thing, David," she said. "We'll take care of everything. That's why you have us." He felt a wave of relief. He'd done the right thing, paid his premiums, and now his insurance company was going to step up. His car was towed to a designated yard, and an adjuster was assigned. A few days later, the adjuster called. The car was a total loss. No surprise there. The adjuster said they'd have a settlement offer for him in a day or two. This is where the story turns. The offer came in and David's jaw hit the floor. It was almost $5,000 less than what similar SUVs were selling for on AutoTrader, Cars.com, and Kelley Blue Book. He was confused. He called the adjuster back, assuming it was a simple mistake. The adjuster, no longer friendly and empathetic, was now cold and clinical. He said, "Well, sir, that's what our valuation tool came up with. We pulled comparable vehicles, and this is the fair market value." David asked to see the valuation report. When he got it, he saw the comparable vehicles they used were base models with cloth seats and none of the premium features his SUV had. 2 of them were from dealerships over 300 miles away in a different state. David pushed back politely. He sent screenshots of truly comparable vehicles for sale in his local area, all priced thousands higher. The adjuster's response? Silence. David called and left a voicemail. No reply. He sent a follow-up email. Nothing. Days turned into a week. He was paying for a rental car out of pocket, as his policy had a limit that was quickly running out. The stress was mounting. This wasn't just an inconvenience, it was affecting his work, his family, his sleep. He felt completely powerless, like he was screaming into a void. The company he had trusted and paid for over a decade was now treating him like an adversary. A nuisance. This is the classic playbook. Delay, deny, defend. The goal is to wear you down. They know you need a car. They know you're bleeding money on a rental. They know the average person doesn't have the time, energy, or knowledge to fight a multi-billion-dollar corporation. They are banking on you giving up and accepting their lowball offer out of sheer exhaustion and desperation. And for millions of people, it works. But David, frustrated and angry, started doing some late-night research, and he stumbled upon 2 magic words: bad faith. He learned that an insurer has a duty to conduct a thorough, fair, and objective investigation. He learned that knowingly using inaccurate information, like comparing a premium model to a base model, to intentionally undervalue a claim could be considered an act of bad faith. He learned that unreasonable delays in communication and payment, designed to put pressure on the policyholder, are a hallmark of bad faith. He realized they weren't just being difficult, they were potentially breaking the law. The next morning, David made a phone call, but this time it was different. He wasn't emotional. He wasn't angry. He was calm, factual, and armed with new language. When he finally got the adjuster on the line, he said the following almost verbatim: "I am formally requesting a new valuation of my vehicle using accurate, local, and truly comparable vehicles, as required by state law. I have provided you with these examples which have so far been ignored. This failure to use accurate data, and the subsequent delay in resolving my claim is causing significant financial hardship. I am concerned that the company's handling of this claim is not in compliance with its duty to act in good faith and fair dealing. I need this to be reevaluated and resolved, or I will need to file a formal complaint with the State Department of Insurance and explore all my legal options, including a potential bad faith claim." The silence on the other end of the line was deafening. The entire dynamic of the conversation shifted in an instant. The words bad faith, State Department of Insurance, and legal options are trigger phrases. They get flagged. They elevate the claim from a routine file that an adjuster can stonewall to a serious legal liability for the company. A bad faith lawsuit isn't just about the original claim amount. If a jury finds an insurer acted in bad faith, they can award massive punitive damages designed to punish the company. It can turn a $20,000 car claim into a multi-million-dollar judgment. Within 2 hours, David received a call from a supervisor. Her tone was completely different. Apologetic. Understanding. "It seems there was a miscommunication," she said. "Let me personally take a look at this for you." The next day, David received a new settlement offer. It was for $800 more than the original one, perfectly in line with the local comps he had sent a week earlier. The check was overnight. David's story isn't an anomaly. It happens every single day. The key takeaway is this: your power lies in your documentation and your vocabulary. From the very first call, you should be keeping a log. Note the date, time, the name of the person you spoke with, and a summary of the conversation. Communicate in writing, especially via email, so there is a paper trail. If they tell you something on the phone, send a follow-up email confirming it. Dear adjuster's name, just to confirm our conversation a few minutes ago, you stated that. This creates an undeniable record. And if you feel them starting to drag their feet, to lowball you, to ignore you, you introduce the concept of good faith. You don't have to scream it. You don't threaten. You simply state your concern calmly and professionally, just like David did. You show them that you know your rights, you know their obligations, and you are not the exhausted, uninformed victim they were hoping for. You are an educated consumer who will not be pushed around. This simple act of signaling your knowledge can be enough to completely change the outcome of your claim. But what happens when it doesn't? What happens when they call your bluff, when the supervisor is just as difficult as the adjuster, and they basically dare you to make a move? You might think the next step is to immediately run out and hire a lawyer. But it's not. There's a crucial intermediate step. A specific government agency whose entire purpose is to hold companies like Progressive accountable. Using them is free, it's powerful, and it can often solve your problem without ever needing to pay legal fees. And how to leverage that power is what we're covering next. Every single state in America has a Department of Insurance, or a similarly named regulatory body. Think of them as the referees of the insurance world. Their job isn't to sell policies or make profits. Their sole purpose is to enforce the rules, protect consumers like you and me, and hold insurance companies accountable for their promises. When you file a formal complaint, you are not just sending another angry email into the void. You are officially activating a government regulator to investigate your case. Insurance companies, including Progressive, are licensed to operate on a state-by-state basis. These state departments have the power to levy massive fines, conduct audits, and in extreme cases, even revoke an insurer's license to do business in that state. A complaint filed with them isn't just a customer service ticket. It's a black mark on the company's permanent record with their regulator. It's a problem they can't just ignore or assign to a low-level adjuster. It demands a formal, written response and often gets escalated to a senior internal affairs or compliance team. Suddenly, you're not just a small-time claimant they can push around. You are the reason they're getting official, unwanted attention from the government. That, right there, is the leverage. That is the power. So, how do you wield this power? Let's walk through a scenario. Let's imagine a driver, we'll call her Maria. Maria has been a loyal Progressive customer for 6 years. Perfect driving record. One afternoon, sitting at a red light, she gets rear-ended. The other driver is clearly at fault. The police report confirms it, and there's significant damage to her bumper and trunk. It seems like a straightforward open and shut case. She calls Progressive, opens the claim, and things start to go sideways. The first adjuster she talks to is friendly but vague. Days turn into a week with no updates. She calls back and gets a different person who seems to have no idea about her case. They finally send an appraiser who lowballs the repair estimate, suggesting used parts for her relatively new car, and quoting a price that 2 local body shops laugh at. Maria sends in the higher, more realistic estimates from the shops, and is met with silence. Then, she gets an email saying Progressive is only willing to pay their initial, lowball amount. They claim the additional damage must have been pre-existing. It's infuriating. She feels powerless, like she's being accused of fraud for simply wanting her car fixed properly after an accident that wasn't even her fault. This is the exact moment where most people either give up and pay the difference out of pocket, or they hire a lawyer. But there is a third, incredibly effective option. This is where Maria unleashes her secret weapon: the Department of Insurance. First, she prepares for battle. This is the most critical step. You cannot go to the regulator with just an angry story. You need to build a case. Maria gathers all of her evidence into a single digital folder. This includes her Progressive policy number and her claim number, the police report from the accident, clear photos of the damage from multiple angles, a copy of the lowball estimate from the Progressive appraiser, copies of the 2 higher, more detailed estimates from her trusted local body shops, and most importantly, a log of all communication. She writes down the date and time of every call she made, who she spoke to, and a summary of what was said. She saves every single email exchanged with Progressive. She is building an undeniable paper trail that shows a pattern of delay and unreasonable valuation. Next, she finds her state's Department of Insurance website. This is simple. She just goes to Google and types in California Department of Insurance complaint or Texas Department of Insurance complaint. Every state site is a little different, but they all have a consumer complaints section. She finds the online form to file a complaint against an insurance company. Now, for the complaint itself, this is not the place to be overly emotional. Rage and frustration are understandable, but facts are what win these cases. Maria structures her complaint like a professional report. She uses a clear, concise, and factual tone. She starts with a simple summary at the top. This complaint concerns Progressive Insurance's unreasonable delay and bad faith handling of auto claim number. Insert claim number. Following a not-at-fault accident on insert date. Then, she creates a chronological timeline of events. This is incredibly powerful. Date 1. Accident occurred. Police report filed. Case number. Insert number. Date 2. Claim filed with Progressive. Spoke with adjuster name 1. Date 7. After no contact, I called for an update. Spoke with adjuster name 2, who was unfamiliar with the case. Date 12. Progressive appraiser estimated damages at $1,800. Date 14. Received estimates from 2 certified collision centers for $4,200 and $4,500, respectively. Emailed both to adjuster name 3. Date 21. Received email from Progressive stating they would only honor their original estimate of $1,800, baselessly claiming other damage was pre-existing. See how powerful that is? It's not a rant. It's a list of documented failures. She attaches all the evidence she gathered, the police report, the photos, the estimates, the email chain. Finally, she clearly states the resolution she is seeking. She doesn't write, "I want justice." She writes, "I am requesting that the Department of Insurance compel Progressive to honor the legitimate repair estimates from certified collision centers and pay the full cost to restore my vehicle to its pre-accident condition, as is their contractual obligation under my policy." She hits submit. What happens next is a game changer. Within a few business days, Maria gets an email from the Department of Insurance. It contains a case number and the name of the investigator assigned to her complaint. The DOI then forwards the entire package, her complaint, her timeline, all her evidence, to a dedicated compliance department within Progressive. This is no longer a customer service issue for Progressive. It is a regulatory compliance issue. The clock is ticking and they are now legally required to provide a detailed, formal response to the state government, addressing every single point Maria made. About a week later, Maria's phone rings. It's not the unhelpful adjuster she'd been dealing with. It's a woman who introduces herself as a senior claims manager from Progressive's executive resolution team. Her tone is completely different. She's apologetic. She says she has reviewed Maria's file. She apologizes for the miscommunication and the delays in handling her claim. She says Progressive has reevaluated the estimates and has approved the full repair cost of $4,200 from Maria's preferred body shop. A check will be overnight. Problem solved. No lawyer. No fees. No more fighting. Maria simply presented a logical, fact-based case to the one entity that Progressive cannot ignore. She shifted the balance of power from the billion-dollar corporation back to herself. This process works for all kinds of issues, not just lowball claim offers. Unfair premium hikes, a policy that was canceled without proper notice, endless delays in getting a payment. If you feel you've been wronged and have documented your case, filing a complaint with your state's Department of Insurance is one of the most powerful tools a consumer has. It's free, it's effective, and it forces the insurance company to take you seriously. It's the accountability mechanism built into the system that most people, frankly, don't even know exists. So while we've seen that Progressive's day-to-day customer service can be a mixed bag, and their claims process can sometimes feel like an uphill battle, it's crucial to remember that you are never truly powerless. Knowing how to use the system is just as important as the policy you buy. Now we've covered it all. The good, the bad, the ugly, and the ultimate secret weapon you have in your back pocket. We've looked at their technology, their discounts, their financial stability, and the most common complaints lodged against them. We've put Progressive under the microscope, which brings us to the final critical question. After all of this, what's the verdict? Is Progressive Auto Insurance the right choice for you in 2026? It's time to put all the pieces together and give you the final answer. Let's break it down. The truth about Progressive, like any insurance giant, is that it's not a monolith. It's a complex machine designed to serve some people exceptionally well, and others not so much. The right choice for your neighbor might be a financial misstep for you. So instead of a simple thumbs up or thumbs down, I'm going to give you something far more valuable. A clear profile of who Progressive is built for in 2026, and who should probably keep shopping. First, let's talk about who should absolutely have Progressive at the very top of their list. You are the ideal Progressive customer if you are a tech-savvy, self-sufficient driver who values control and customization over hand-holding. You live on your smartphone, you pay your bills through apps, you manage your investments online, and the idea of having to call someone and wait on hold to make a simple policy change sounds like a nightmare. Progressive's digital experience, from its slick mobile app to its comprehensive website, is tailor-made for you. You can get a quote, buy a policy, file a claim, and even upload photos of damage, all without ever speaking to a human being if you don't want to. You see the Name Your Price tool not as a gimmick, but as a powerful way to reverse engineer your policy to fit your budget. You're willing to experiment with different coverage levels to see exactly how it impacts your premium in real time. Furthermore, you're not afraid of telematics. The idea of the Snapshot program doesn't spook you. It intrigues you. You're a confident, safe driver and you believe you should be rewarded for it. You see it as a fair exchange. You provide your driving data, and in return, you get a premium that reflects your actual habits, not just your demographic profile. You're willing to trade a little bit of privacy for the potential of significant savings, and you trust yourself to avoid the heartbreaking and late-night driving that could work against you. For you, Snapshot isn't Big Brother. It's a performance-based discount you're ready to earn. The second person who needs to get a Progressive quote immediately is the driver with a colorful history. Let's be blunt. If you have a past accident, a speeding ticket or two, or even a more serious infraction like a DUI on your record, many insurance companies will either deny you outright or quote you a premium that feels more like a punishment than a price. This is where Progressive has carved out a massive share of the market. They were one of the pioneers in using advanced algorithms to price risk more granularly. This means that instead of just putting you in a high-risk bucket and charging an astronomical rate, they are often more willing and able to find a competitive price. They've built their entire business model on being able to accurately insure a wider spectrum of drivers than many of their more conservative competitors. So if you've been getting the cold shoulder from other carriers, Progressive may not just be an option. It might be your best and most affordable safe harbor. And finally, you are a prime candidate for Progressive if you're a bundler with diverse insurance needs, especially if those needs go beyond the standard house and car. Do you own a motorcycle, an RV, a boat, a PWC? This is Progressive's playground. They are the #1 insurer of motorcycles and boats in the country for a reason. Their policies are often robust and well-priced, and their bundling discounts can be substantial. If your life involves more than just a daily commute, and you want the convenience of having all your toys insured under one roof, with one app and one bill, Progressive's ecosystem is incredibly compelling. The multi-policy discount can often make the total package cheaper than sourcing individual policies from specialty insurers. Now let's flip the coin. Who should be cautious? Who should think twice before signing on the dotted line with Progressive? First, if you are a person who deeply values a personal human connection with your insurance provider, you need to pause. If your ideal scenario involves sitting down in a local office, having a cup of coffee with an agent who knows your name and your family's history, and having them guide you through your policy options, Progressive's direct-to-consumer model might feel cold and impersonal. While they do have a network of independent agents, their core business is built on digital and phone interactions. Their customer service, as we've seen from the ratings, can be a mixed bag. If the thought of navigating a phone tree during the stress of a post-accident claim fills you with dread, and you want the assurance of a single, dedicated local contact to advocate for you, then a company like State Farm or a local agent representing a carrier like Erie or Auto Owners might be a much better fit for your personality and your needs. For you, a slightly higher premium might be a worthwhile investment for that peace of mind. Second, if you are fiercely protective of your personal data and privacy, the Progressive ecosystem, particularly the Snapshot program, should give you reason for concern. In an age of data breaches and constant tracking, the idea of voluntarily installing a device or using an app that monitors your every move in the car, when you drive, where you drive, how fast you accelerate, how hard you brake, can be unsettling. While Progressive has security measures in place, the fundamental transaction is one of data for discounts. If you believe your driving habits are your business and yours alone, and you're not comfortable with your insurer having that level of insight into your daily life, then you should steer clear of Snapshot. And since Snapshot is one of their primary tools for offering the deepest discounts, opting out might mean you won't get their most competitive rate anyway. And third, surprisingly, is the perfect driver with a spotless record and excellent credit. This might sound counterintuitive, but stick with me. While Progressive will certainly want your business and may offer you a good rate, they are not always the absolute cheapest for this top-tier demographic. Companies that specialize in preferred, low-risk drivers, think Amica Mutual or USAA if you're eligible, sometimes reward this group with even lower base rates and loyalty dividends that Progressive can't match. Progressive's strength is in its broad appeal and its ability to price a wide range of risks. For the perfect driver, the market is your oyster. You are the customer every single company is fighting for. You owe it to yourself to leverage that position. You should absolutely get a quote from Progressive as a benchmark, but don't stop there. You must compare it against those premier carriers who cater specifically to your profile. You may find significant savings elsewhere. So, what is the final verdict for 2026 and beyond? Progressive is not just an insurance company. It's a technology company that sells insurance. It is built for the future of the industry. A future that is more digital, more data-driven, and more automated. Choosing Progressive in 2026 is a bet on that future. It's a bet that algorithms can price your risk more fairly than a human underwriter, that an app can provide better service than a call center, and that sharing your driving data is a smart way to lower your costs. For many people, especially the younger, digitally native generation and those who have been underserved by traditional insurance models, this is a fantastic bet. It offers unparalleled flexibility, control, and potential savings. But for those who still believe in the value of human relationships in business, who are wary of the relentless march of data collection, and who prioritize stellar, consistent service above all else, Progressive's model may feel like a step in the wrong direction. Ultimately, here is my final unequivocal advice. Your single biggest mistake would be to not get a quote from Progressive. They are too big, too competitive, and too influential to ignore. You must know what they can offer you. They are the ultimate benchmark in the modern insurance market. But your second biggest mistake would be to get a quote from Progressive and stop there. Insurance is not a product you buy. It's a market you shop. Loyalty is a one-way street, and it rarely benefits the consumer. So here is your mission: get your quote from Progressive. Then, get a quote from a traditional, agent-based carrier like State Farm or Allstate. And finally, get a quote from a highly rated direct competitor like Geico or a regional favorite. Compare the coverage line by line. Compare the deductibles. And then, and only then, compare the price. The power in 2026 is in your hands. Progressive might very well be the right choice for you, but you will only know for sure by making them prove it. They are a formidable contender, a technological powerhouse, and an essential part of any serious search for auto insurance. But whether they win your business should depend not on their clever commercials or their famous name, but on the cold, hard numbers and how their model aligns with what you truly value. The answer is out there, and now you know exactly how to find it.